What we saw unfold over the weekend, the GST Council, led by Finance Minister Nirmala Sitharaman, met in Jaisalmer, Rajasthan for its 55th meeting. Among the key decisions taken, the Council approved an 18% GST on the margin value of used electric vehicle sales by businesses. Meanwhile, clarity was also provided on taxability of popcorn, with caramel popcorn continuing to attract 18% GST as it happens to be in the confectionery segment. Pre-packed and spiced popcorn taxed at 12% and unpacked and unlabeled popcorn at just 5%. However, many anticipated decisions of lowering tax rates on life and health insurance premiums, as well as an app-based food delivery services like Swiggy and Zomato, and GST implications on the delivery service itself were deferred. Moreover, in a relief for public welfare, the GST on fortified rice kernels distributed under public schemes was slashed from 18% to 5%. We have a guest joining us this morning, Avinash Gorakshakar, taking out time on this Monday morning, just 2 days ahead of Christmas. Avinash, good morning. Thank you for joining us on News9 Live. First up, great expectations from the GST Council meeting. Nothing really concrete coming out of it as far as at least the premium on life and health insurance was concerned. There were also talks, Avinash, about maybe a go-in-between rate between 12% and 18%. Nothing really coming out from it. What was the market factoring in, and what does the market make of the announcements made on Saturday?
Yeah, good morning, Karthik. I think the GST meeting has not conclusively given any major announcements, and I think the market was obviously expecting some more, news flow on food app, companies, on the insurance sector, which I think could have been a little, positive for these sectors. But I think overall, the government is also probably in a wait and watch mode and doesn't want to take decisions in a hurry. So I think that was the possible reason why these decisions could not come about. And I think the markets would obviously, keep this, outcome from the GST meeting as a neutral stance. I don't expect any major downside or upside based on the announcements which have come out till now. So I think we'll have to wait and watch, Karthik, for maybe the next round of GST meeting. And maybe at that point of time, we could get some good news, for the food app as well as for the insurance sector, which I think are key areas the market was looking forward to.
The Finance Minister also in her press conference after the GST Council meeting said that there were speculations ripe about another tax rate being introduced. In fact, even we have discussed earlier that perhaps a 15% GST slab rate could be introduced at some point. Is there merit in the Finance Minister and the group of ministers really now considering another tax slab, or do you think, Avinash, that's going to complicate the GST slabs even more from what they already are?
No, I think, the current slab structure seems to be quite ideal. My sense is that, the government should ensure that it should make things more simple, and the structure has to be simplified, because if you introduce a new slab, that would further may create a little bit of confusion. So I think, it's still too early to talk about it, but I think, quite frankly, introduction of a new tax slab is not going to be the solution. Better compliance and better efficiency in collecting GST should be the key focus area. So I think, rather than having a new tax slab, I think it's better to focus on the existing slab structure and, encouraging the industry, because clearly GST has become a kind of a stumbling block for many sectors in terms of the demand, because as of now, consumption is down. Most manufacturers are looking forward that the government does not impose heavier GST on them, because that obviously impacts, demand, from the consumer point of view.
Okay, and the 18% GST on used electric vehicles when they are sold to a third party, not person to person, no GST. When electric vehicles are sold through a platform, a third party platform, and 18% tax. What does this do to the already dwindling demand of electric vehicles in India, Avinash?
No, I think, Karthik, this is definitely not a positive development, because, the government needs to encourage the use of electric vehicles, whether it is a primary sale or a secondary sale. And I think, this 18% on the difference is also going to be a significant amount of, outflow for the buyer of the electric vehicle. So I think it's going to obviously increase the cost of ownership. It's going to increase the cost of the vehicle. And as everyone is aware that even today the electric vehicle penetration in India is very, very low. We need to encourage the electric vehicle segment at least for the next 5 years before we impose higher taxes like the diesel and petrol cars. So I think definitely in the near term this is going to be negative. Although the resale and the used market is not a very large market in India, incremental sales are now going to be a little more tougher because this is going to increase the cost of ownership for the customer.